Global financial markets remain on edge as the escalating conflict between the US-Israel alliance and Iran continues to disrupt energy supplies and push oil prices sharply higher, raising fears of renewed inflation and slower global growth. The biggest shock is coming from the energy market. Oil prices have surged toward multi-year highs as tanker traffic through the Strait of Hormuz, one of the world's most critical shipping routes, remains severely disrupted. Brent crude has climbed close to $90 per barrel, while U.S. benchmark West Texas Intermediate is trading near $88. Analysts say the market is now pricing in a significant geopolitical risk premium as traders worry about the loss of millions of barrels of daily supply. Roughly one-fifth of the world's oil and liquefied natural gas normally passes through the Strait of Hormuz, making the region one of the most sensitive energy choke points on the planet. Shipping disruptions and attacks across the Gulf have already forced some producers to cut output and delay exports, adding further strain to global energy markets. Across Asia, stock markets remain volatile as investors react to the surge in oil prices and the growing risk of a wider regional war. Export-heavy markets have been particularly sensitive to energy shocks and shipping disruptions, with technology, automotive, and manufacturing companies seeing some of the largest sell-offs during recent sessions. European markets are also feeling the pressure. Investors remain cautious as higher energy prices threaten to reignite inflation across the Eurozone and raise costs for businesses and consumers. Energy companies have benefited from the surge in crude prices, but airlines, transport companies, and industrial stocks have faced renewed selling pressure as fuel costs climb. On Wall Street, the most recent session saw markets slide as geopolitical risk rattled investors. The Dow Jones Industrial Average dropped more than 450 points, while the broader S&P 500 and Nasdaq also declined as traders shifted money into safer assets and energy stocks. Energy markets are also beginning to show signs of supply stress. Kuwait has already reduced crude production as a precaution amid rising regional tensions, while other Gulf producers are reviewing similar measures as shipping disruptions continue. The broader concern for investors now is that the Middle East conflict could trigger a prolonged energy shock. Analysts warn that sustained disruption around the Strait of Hormuz could push oil prices even higher, potentially above $100 per barrel if supply losses deepen. For now, global markets are reacting to two competing forces: rising energy prices boosting oil companies, and fears that those same price increases could slow economic growth worldwide. As long as the conflict continues to threaten one of the world's most important energy corridors, markets are likely to remain volatile with oil prices, inflation risks, and geopolitical developments driving the next moves in global finance.